of overseas property ownership. We will set up a new dedicated kleptocracy cell in the National Crime Agency to target sanctions evasion and corrupt Russian assets hidden in the UK, and that means oligarchs in London will have nowhere to hide. And Mr. Speaker, I know that this House will have great interest in the potential of cutting Russia out from SWIFT. And I can confirm, as I've always said, that nothing is off the table. But for all these measures to be successful, it is vital that we have the unity of our partners, the unity in the G7 and other fora. And, Mr. Speaker, Russian investors are already delivering their verdict on the wisdom of Putin's actions. And so far today, Russian stocks are down by as much as 45%, wiping $250 billion from their value in the biggest one-day decline on record. Sberbank, Russia's biggest lender, is down by as much as 45%, and Gazprom down by as much as 39%, while the ruble has plummeted to record lows against the dollar. We will continue on a remorseless mission to squeeze Russia from the global economy piece by piece, day by day, and week by week. And we will, of course, use Britain's position in every international forum to condemn the onslaught against Ukraine, and we will counter the Kremlin's blizzard of lies and disinformation by telling the truth about Putin's war of choice and his war of aggression. And we will work with our allies on the urgent need to protect other European countries that are not members of NATO and who could become targets of Putin's playbook of subversion and aggression. And we will resist any creeping temptation to accept what Putin is doing today as a fait accompli. There can be no creeping normalization, not now, not in the months to come, not in the years ahead. We must strengthen NATO's defences still further. And so today I called for a meeting of NATO leaders, which will take place tomorrow, and I will be convening the countries that contribute to the Joint Expeditionary Force, which is led by the United Kingdom and comprises both NATO and non-NATO members. Last Saturday, I warned that this invasion would have global economic consequences, and this morning the oil price has risen strongly. The government will do everything possible to safeguard our own people from the repercussions for the cost of living. And of course, we stand ready to protect our country from any threats, including in cyberspace. Above all, the House will realise the hard and heavy truth that we now live in a continent where an expansionist power, deploying one of the world's most formidable military machines, is trying to redraw the map of Europe in blood and conquer an independent state by force of arms. And it's vital for the safety of every nation that Putin's squalid venture should ultimately fail and be seen to fail. However long it takes, that will be the steadfast and unflinching goal of the United Kingdom. I hope of every member of this House and every one of our great allies, certain that together we have the power and the will to defend the cause of peace and justice as we have always done. And I say to the people of Russia, again, whose president has just authorized an onslaught against a fellow Slavic people, I cannot believe that this horror is being done in your name, or that you really want the pariah status that these actions will bring to the Putin regime. And to our Ukrainian friends, in this moment of agony, I say that we are with you and we are on your side. Your right to choose your own destiny is a right that the United Kingdom and our allies will always defend, and in that spirit, I join you in saying Slava Ukraini, and I commend this statement to the House.
I now call the Leader of the Opposition. 整个出口的42%。也就是说，整个俄罗斯这个国家的话呢，它的主要还是靠能源这些东西。那能源最大的买家是哪里啊？那可能就是欧洲的这些国家。所以，如果从国家来分的话，大家都以为说好像中国和俄罗斯之间的这个贸易的绝对值是非常大的，其实并不是这样啊。就是说，俄罗斯对外出口或最大的贸易伙伴确实是中国啊，多少呢？14.6%。也就是说啊，它不是一个非常绝大多数的一个值。那它主要的出口国家还是欧洲的一些国家，比如说荷兰啊，像其实包括英国也现在也比较多，占了7%，荷兰7.4%，而且它还德国，大家知道土耳其啊，包括就周边的意大利、波兰等等这些国家，芬兰啊，也就是说，整个俄罗斯它的主要贸易伙伴呢，其实还是主要是欧盟。然后的话呢，美国几乎可以忽略，中国的话占第一，但是呢，它也不是一个绝对支配的一个第一位。好，这些数据给大家，大家就可以自己去评估了，这个影响到底有多大，是吧？总体上讲的话呢，就是欧盟现在呢就很难过啊，因为毕竟啊，就是说占的比例5%，你说太大嘛，也没有太大。但是呢，它太集中，主要是集中在能源、天然气这一块。如果真正的去制裁，大家最后看到第一轮啊，就说俄罗斯说去支持2个东部的那个州独立的时候呢，给的第一轮制裁其实不疼不痒的这种感觉，因为他只是说制裁几个银行啊，制裁一些个人。根本上就没有涉及到能源这一部分。如果说你不涉及到能源这一部分的话，对俄罗斯来说它是有关大局的，因为它主要出口都是跟能源有关的，42%的这个比重，最大的这个你没有制裁它，对它来讲的话呢，它其实影响的话呢，没有想象中那么大，是吧？但是呢，为什么不制裁这一部分的话呢？其实呢，欧盟也是有一些投鼠忌器，因为毕竟啊，你非常依赖于它这一部分。那你说像天然气这种东西，如果说你真的从美国去进口的话，那美国隔这么大老远，然后天然气怎么过去呢？那可能就要涉及到用一些 LNG 的这些船，一些特种船，然后天然气要 就说冷藏然后高压的液化的状态下面，在海上一走几个星期才能运到欧洲，那这个成本是不言而喻的，是吧？所以呢，今天白宫已经发表声明，就是今天整个G7国家和北约的这些首脑会开会，估计会出台更严厉的第2轮制裁。第2轮制裁，我们还是看一下，如果这个制裁涉及到了能源方面的制裁的话，那这个的话呢，可能就是下重手了对俄罗斯的影响就会比较大。但这一来的话呢，欧洲国家就会非常难过，是吧？因为最终影响的其实不是美国其实是欧洲。如果今天博弈最后结果呢，还是不疼不痒的制裁一些个人，根本上还是不涉及到能源产品的话，大家可以想象一下，这个事情的话呢，可能就是又可能类似于像克里米亚这种事情一样的，就是说高高举起的话，轻轻放下，然后整个俄罗斯从地缘政治方面的话呢，最终还是会慢慢让这个。变成一个既成事实好，这就是说整个市场的状况。我们不是做这个地缘政治的研究的，大家可以看到网上有很多各种各样的评论。但是我们从股市的角度来讲的话，最直截了当的就是大家看数据这个是最有说服力的一个东西。然后大家自己其实就能得出一个很明确的一个结论来。所以呢。我始终说的一个字是什么东西呢？不要慌一恐慌以后呢，现在大家有很多人就非常不淡定。大盘已经跌了比如说今天这样子的话，10%点多，比如说，然后像纳斯达克已经跌了20%多，然后有很多的人呢还在恐慌性的往外扔，甚至还在去做 short。那你这个呢，想一下你的风险在哪里？到底是上面大还是下面大，是吧？那前面讲的3种投资哲学里头，你到底是准备用哪种方法在市场上生成？这个大家要好好的去评估一下。
好的，这个谢谢王老大。那么咱们下个星期4继续空中再会。
好嘞，好，再见。
多伦多西区。
以上内容仅代表毕肯个体观点，不是投资建议。股市有风险，投资需谨慎。
actual inflation and to inflationary psychology. It will try to draw lessons from the 1970s, where it did essentially monetize an oil shock to the economy. So I think that's what it would do, but perhaps do so more slowly and watch for other impacts, potentially to consumer sentiment and consumer spending, that could create underlying declines in underlying demand.
Josh, got a question?
Yeah, Steve. So when the Fed thinks about the events in Eastern Europe and as it pertains to Russia, they're probably, or hopefully, they're thinking about the impact on sentiment more than the actual impact on economics. Bank of America's out with a note saying that if you calculate all the S&P 500 sales to Russia, for example, it's about 0.1% or effectively zero. Right. Russia's not really involved in supply chains. Even Central and Eastern Europe, they don't tend to ship a lot of goods to Russia. It's really not a player to the point where it would have like a GDP impact. We agree on that, right?
Russia is the 11th largest GDP in the country. And what's interesting here, and this is sort of one of those macabre upsides, if you might, which is that the 2014 invasion of Crimea, as a result of that, I was talking to a banking industry expert this morning, U.S. banks moved away from integration with Russia. The whole Putin regime has been one that has prompted U.S. businesses as well as U.S. investment and the interconnection of Russia and the United States to go further apart compared to, for example, the policy in the 1990s when I was there, when the idea was integration. It's moved further apart. The bigger problem you want to watch out for, Josh, is this connection between Europe and Russia, which is obviously more integrated. Sure. The other caveat I'll give to my answer here is we need to watch the sanctions. How deep do they go into the financial system? For example, excluding Russian banks from SWIFT. Doesn't look like they're going to do that, but those are the sort of things you want to watch for that have, I would say, some potential systemic risk, though I would say it's limited.
Well, I mean, I think that there's other sort of, there's a whole, if you want to view it like a spider web and you sort of go out and the web gets bigger and bigger and bigger, connections to China. I mean, you mentioned the Russian holdings of U.S. treasuries. Obviously, if China actually comes out hard in support of Russia, it has a vast holding of U.S. treasuries. And so that would be of a concern. Or if there's secondary sanctions on China because it does business to Russia and it enables them to get around sanctions put on by the West, that's a whole other ball of wax.
Let me just tell you from my experience in my Russian days is that a lot of geopolitical experts have been wrong, suggesting that Russia and China were going to form some form of alliance against the United States. They flirt with each other. They dance around each other. They have a very long border with each other. It is always a fear when these sort of things happen. You cannot rule it out, but it has not happened, and it's always brought up. And China always works in its own interest, and oftentimes that does not coincide with the interest of Russia.
All right. Steve, thank you for the perspective. Always good to see you. Steve Leisman.
Thanks.
Up next, how hedge funds are positioning in this market as we head to break. Let's take a check on the markets here. Still deeply in the red. The Dow is down by 2.2%. The S&P 500 losing some ground as well, down 1.5%. The Nasdaq is back in the red, down at 0.6%. Halftime is back in 2.
Welcome back. I'm Rahel Solomon, and here is our CNBC News update at this hour. Moments ago, Britain announced sweeping new sanctions against Russia. Prime Minister Boris Johnson says that the UK will freeze assets of all major Russian banks and impose economic sanctions on more than 100 individuals, entities, and subsidiaries. High-tech exports to Russia will also be restricted. Just outside Kyiv, a Russian helicopter gunship was reportedly forced to land. Ukrainian media reported Russian helicopters flying over the capital. Not far away, President Zelensky says that Ukrainian forces are stopping a Russian airborne attack on a key cargo airport. He says many Russian warplanes and armored vehicles were destroyed. He did not, however, give numbers. In Kyiv proper, police are assessing the damage from missile attacks. The mayor has ordered a curfew, which will start in less than 3 hours. Public transportation will not be available during the curfew, and subway stations are being turned into shelters. And on the news tonight, what impact the growing sanctions will have on Russia and how likely they are to stop Russian attacks. That's tonight at 7 Eastern. Melissa?
Rahel, thank you. Rahel Solomon. Let's take a closer look now at the levels investors need to watch from here. Joining us on the phone, Jonathan Krinsky, Chief Market Technician at BTIG. Jonathan, great to have your take. What are you seeing in the charts right now?
Yeah, thanks, Melissa. So one of the things we've been kind of talking about is the lack of full capitulation that we've seen. Despite the fact that the market's down substantially year to date, we actually have not seen a major distribution day, which we would define as 90% of all NYSE volume occurring in declining stocks. And we got close to that in the open today, but we're not there at the current time. And so really, in order to get one of those type of days, you need to see pretty much all sectors get hit. And, we are starting to see a little bit of that with the worst sectors today have been kind of the areas that have held out the best. So financials, staples, materials, some of the cyclicals. And so those are getting hit, but, we're seeing a little bit of an offset by some of the high growth, long duration sectors that have been beaten down. So we're not getting that full capitulation today, but I think the bigger picture and something that investors need to kind of reset their expectations for is that there's an element of time to corrections. And I think the COVID crash was kind of the anomaly. It only took 23 trading days from high to low for it to be over. And that's really not, what most corrections, the duration lasts. If we look at 2010 and 2011, those corrections were 4 and 5 months in duration from peak to trough, and 2015 into 2016 was 8 months. So I just think there's a bit of an expectation reset that needs to happen, as well as a bit of a bigger capitulatory flush.
What do you make of the bounce we're seeing? You mentioned long duration names, some of the more, the innovation kind of names, the higher multiple sort of names. I mean, can you see a capitulation within a sector, even if the broader sector has not capitulated?
Yeah, that's the bullish argument, is that it's kind of a first in, first out type of situation where a lot of these names that peaked, the ARC names peaked over a year ago, are finally seeing some sort of bottom. I don't know that we're there yet. I don't think one day can tell you that. I think a lot of it is position squaring, as I mentioned. The areas that have held up the best are doing the worst today, year to date, and vice versa. And so I think it's a lot of position squaring. That can be an early signal that we're trying to find some sort of bottom. But again, if you look back, throughout history, it would be almost unprecedented to see a final low that didn't occur with at least one 90% down day, and we haven't seen one of those yet year to date, which is pretty astonishing.
Josh?
Hey, John, I wanted to ask you, I guess on behalf of the viewers who are looking for opportunity right now, as opposed to playing defense, what would you say would have the better chance of a positive outcome given all of the aspects of today's market? Would you tell them, look for the stocks that are holding up the best? Those are the ones you want to be in when this correction or whatever it's to become bear market ends? Or would you tell them, you know what, actually look for the large cap tech or large cap growth names that are down 60, 70%, because those are going to bounce the hardest or have the most short covering or whatever? Like, which side of the fence would you tell people to play on if they're looking to be opportunistic today?
Yeah, for the most part, if your time frame is more than a week or so, you generally are better off sticking with those that are showing relative strength, and those are holding up the best. Now, on a shorter term basis, as I was mentioning today, it's the opposite. So the areas that actually we like, some of the financials and some of the even defensive areas, those are finally succumbing, and so that's the worst part of the market today. But I think generally, as we work through over the next few days and weeks, finding those names that have held up the best, looking at the relative strength, are going to be the ones that take you out of it and serve you better going forward. There's going to be exceptions, single stocks certainly, but generally stocks that have gone down 60, 70, 80% after their initial reflex rally, which could be substantial, but it's usually not that long in duration. Those usually don't have lasting outperformance at least from a historical perspective.
Great answer.
Jonathan,
thank you.
Thanks so much for your analysis. Appreciate it. Jonathan Krinsky, BTIG. According to history, Pete, we should be buckling our seatbelts because this could be 4 or 5 months before we actually hit a bottom.
Yeah. Right, and Jonathan was talking about, looking for that full capitulation, which we has been seeing. That's what he was just describing as well. So there's a lot of different pieces to this, Mel. I got to tell you, we talked about this before the show, but we were looking at a lot of the different volatility that's being bought and the spider puts that are being bought, IWM puts that are being bought, triple Q puts that are being bought. So there's been a lot of folks out there that aren't missing what's going on and seeing that there still could be some downside. That's why I'm not so convinced that we haven't that we have hit the lows of what we're going to get before we start to move to the upside. And I think what Jonathan had to say says a lot about that. I also would say this. I think there are names out there for the most part that do get crushed to the downside, maybe wrongly. Those are probably going to be the best opportunities. I actually see a lot of names that are getting sold off with the markets that are not getting hit enough, quite frankly, because of where they trade from a PE perspective. But I do think there are going to be some quality names out there, and that's what we're all looking for, of course. Josh found Facebook and a couple others. Look at the PE now of Facebook, for instance. I mean, it has reached a point where it feels like it needs to start moving to the upside again. But that doesn't dismiss the fact that there will be sellers out there as well. But I applaud Josh for his buy of Facebook today.
16 forward. There was an interesting note from Jefferies that was released yesterday afternoon, Brent. I don't know if you caught it, from Brent Thill saying, why would Meta unleash a massive buyback program if things are really going to go south? That'd be the worst timing ever. So that's one component as to why they think that maybe Facebook, will find a floor here. What do you think?
Well, I think that, Facebook has been trading at a discount, even prior to this huge sell-off after their earnings, a discount from a PE to the other Apples, Googles, Amazon, and Microsoft, because I think that, first of all, a lot of people just don't like how Mark Zuckerberg still owns all of the voting shares, and they haven't been the best actors over the past 5 and 6 years. And so I think there's a discount there. But ultimately, if they continue to grow, and I think that the $10 billion they're spending in their version of the metaverse is actually a drop in the bucket to their balance sheet. And so I think that you will have value investors start coming in potentially to a Facebook, because with their earnings growth and these low PEs, you have to just take a step back and just do the math. And so I do applaud Josh. It's probably a really good entry point. I can't bring myself to buy it just because of a million different reasons. I'd rather stick into the energy sector, but I definitely think you will see some value guys start to come in to this stock just because it is trading significantly less even than the S&P, and it's still growing quite quickly.
Yeah. All right, let's bring in Leslie Picker now.
And there's a buyback, and it's a big buyback. That's
what we meant. That was a thrust of the note from Jefferies. Huge buyback underway. All right, let's get to Leslie Picker now. She's looking at how this volatility could impact the largest investors and funds. Leslie, what'd you find?
Hey, Melissa. So macro hedge funds have been the real standouts so far in 2022, pulling in gains in January when others posted losses. We'll find out in a few weeks whether they successfully navigated this week's geopolitical events, although this is exactly the type of environment that would lead investors to allocate to macro funds. Macro funds bet on global bonds, currencies, commodities, and equities and position their portfolios based on probabilities of political and economic events. They're supposed to be experts in geopolitics. Now, after years of struggling and underperforming, macro funds gained 1.7% in January on an asset-weighted basis, according to HFR. That compares to losses of 4% for hedge funds overall and negative 5% for the S&P 500, including dividends. We'll get returns for February in a few weeks' time. Bridgewater is the largest and perhaps most well-known macro fund, solidly in the green during January. JP Morgan urging investors in a new note to hedge their geopolitical risk by increasing allocations to commodities, energy, and materials, which the firm says would help diversify a portfolio in the face of rising inflation, geopolitical risks, and COVID reopening. So against this kind of confluence of factors that are out there, people are talking a lot about just the role macro funds will play in this environment. Melissa?
Leslie, thanks. Leslie Picker. Up next, we'll get to some more moves that our investment committee is making. Halftime is back in 2. The investment committee is making a lot of moves. Weiss, you sold Citigroup. Why?
Yeah, so Citigroup never got to be a full position. And with my view on the economy, which is not as bullish as everybody else's, and on the geopolitical front, I thought that you could see rates come down. I thought you could possibly see a further collapsing of the yield curve. So I've got long-term large positions in Bank of America and Goldman Sachs, which I've not pared back. I just thought that was enough financial exposure.
Bryn, Roblox, what are you doing there?
So as I've talked about before with high growth volatile names, I like to sell calls against them, and this is a good environment to do that. So I was up about 85% on my calls because the stock had gone down. So it gives you a little bit of green, and so I closed those out. And I also closed out my calls that I had on the Qs, because I thought the Qs were a little bit overdone.
So you still own Roblox, the stock, even though you close out your call position?
Yes, I was just call writing just to earn some extra income on the name. And you know, when the stock goes down, when you sell a call, it goes up. And so there's an inverse relationship. But yes, I'm definitely long the Qs, Coinbase, and Roblox.
Okay. Pete, you're buying some calls in healthcare names. Which ones?
Well, you know, Merck specifically stood out for me, Mel. I like these names. I like the healthcare world, and I actually have a lot of different stock positions as well with Pfizer and Merck and others. But you know what? Sometimes you double up. I've done it in Apple. I do it in Facebook. I do it in a lot of different names. But with the healthcare, when I see the options getting bought like I'm seeing, and rather than just adding to my stock position, I'd like to take that ride for something a little bit better beta on the short term. So that's why I added a few calls along the way in some of these different pharmaceutical areas.
All right. Well, as you all already know, it's a massive sell-off day on Wall Street, but there are a number of stocks posting big gains today. We will trade those next on The Hack. Stocks are down today, but there are some winners if you know where to look. Moderna, one of the biggest gainers in the S&P 500 today on the back of its earnings beat. Weiss, you bought it. You own it, excuse me. You bought more today.
Yeah, so look, I've got a lot of cash, as you know, as I've had, and I'm concentrating the portfolio more. So I added to it in the pre-market. Look, they announced first of all, they beat the quarter, both on the top line and bottom line significantly. They announced $19 billion in additional orders. So it's $5 times earnings with now 44 therapeutics and vaccines in the pipeline. It's still an extremely cheap stock. So I know I get a lot of blowback on what the stock's done. By the way, it's not alone in correcting massively, but I've said it before and I'll say it again. As you go out a few years, I believe this will be one of the most valuable healthcare companies in the entire world. So that's what I did. I also added to GXO, by the way, because they just blew out the quarter as well. Unique asset in the marketplace is showing incredible growth, made a phenomenal acquisition over the weekend. So I had added to that too, again, bulking up the position.
Getting back to the conversation we were having earlier about how to view a stock from where it's been, Pete, Moderna is down, 40-something% year to date. Do you look at this stock and think if you bought it today, as Steve did, you'd be getting it at a 40% discount versus the beginning of the year?
You know, in this case, yes, Mel. I like the fundamental story behind Moderna, and I think that Steve's been all over this for a really long period of time, and I know it's been a very volatile stock, but I will tell you, I mean, at these levels, I've been looking at this name for a long time. I have not been in it, but I have certainly considered on many occasions. This is definitely one that's on the table right now for me as well.
All right, let's get to Live Nation, a big winner in the S&P today. The company reporting better than expected revenue. Josh, you own this one. Reopening is happening. It is here, Josh.
Mel, I've gotten beaten up in a number of stocks this year, but Live Nation is not one of them. In fact, it's, I think, the best performing name I'm in year to date or over the last 3 months, or however I'm looking at it. But I think the reason why it's working so well is that not only have they come through Omicron without any issues whatsoever selling tickets, they're actually way ahead of where they were in 2019. Listen to these numbers. This is remarkable. And my hat is off to Michael Rapino and the whole team there. Their show count is up 30% through February relative to 2019 for their largest venue shows, the most profitable stuff they do. That's like Dua Lipa and Billie Eilish and shows of that size. But 45 million tickets sold already for 2022 events. And that is way ahead of what anyone thought might be possible. So the company is on fire. I do think if people aren't traveling as much right now, especially with higher prices, it's probably not going to keep them in the house. And maybe that even plays into Live Nation because they're not going to do nothing, right? So I think the stock can work even from these levels. I'm glad to be in it much lower. I'm not selling it. And I continue to feel that this is really almost monopolistic, this company, in a very good way for shareholders in terms of their hold on live entertainment. They do it right. The stock is rewarding us for being long, and I think the reopening continues and the frenzy for going to live events continues. So I'm sticking around.
The VIP sales are great, and that's high margin stuff. So good for Live Nation. Up next,
Melissa, do you want to come to a Billie Eilish show with me?
With you?
Oh, God.
It's another whole other question. We'll talk about that offline. Up next, what Pete is seeing in the options market amid this sell-off and the moves he is making right now. Halftime is back in 2. We've got breaking news from Washington. President Biden saying that G7 leaders have agreed to move forward with, quote, devastating packages of sanctions and other economic measures to hold Russia to account. Keep in mind, we are expecting President Biden to speak in the next hour or so. We'll bring that to you live as soon as he begins talking. Meantime, time for some unusual activity. Pete, what are you seeing in the options market?
Well, the first one I'm going to give you is a bank. I'm looking at Wells Fargo, Mel. This is a $60 stock just a month ago, and here we are trading underneath 52, but they're buying the April 52.5 calls. 8,000 of those calls were bought today, looking for a little bit of a bounce and some upside. GM, similar story. Was a $60 stock at the beginning of the year. Here it is in the 45s, and they're out there buying the April 50 calls. Traded to about 15,000 of those calls today for $1.45. So like seeing that, looking for a little bit of a bounce, but buying a little bit of time as well.
All right. Got the final trades up next on the Halftime Report. Final trades, Bryn.
Coinbase tomorrow.
Weiss.
Volkswagen.
Josh.
Live Nation.
Pete.
Monster Beverage.
The exchange begins right now.
Melissa, thanks, and welcome to The Exchange, everybody. I'm Kelly Evans, and we're standing by for President Biden, who's now expected to address the nation in about 30 minutes' time and issue new sanctions against Russia in coordination with the G7 members he spoke with this morning. We're going to bring you the speech as soon as it begins. Let's check on the market meantime. It's a quirky picture for stocks today. The Dow deeply negative, off its session lows, down 859, but still down 725. The S&P, though, down 54, about half the amount the Dow is down. And the NASDAQ has been trading in positive territory over the past hour or so. It's currently down about 50 points. We'll have more on this disparity in just a moment. Let's check on oil, though, which has been jumping with all of this going on between Russia and Ukraine. WTI crude over $96 a barrel, up almost 5% today. It's going to put continued upward pressure on prices at the pump. Brent crude, as has been widely covered, over $100 a barrel, tracing back to last night. Here's gold, adding another almost percent today, $19.24 an ounce. Treasury yields, we saw those move sharply lower last night. They have stabilized somewhat. Look at the 10-year there, right around 193. Let's get straight to Washington now, where Kayla Tausche has the latest on what we can expect to hear from the president. Kayla, what are you hearing?
Well, Kelly, there has been much multilateral negotiation throughout the day on how exactly to respond to Russia. President Biden holding a virtual meeting with G7 leaders earlier today, this morning, and a statement that was released by the G7 said that it condemns President Putin for his consistent refusal to engage in a diplomatic process, and says the G7 supports consistent and constructive engagement and coordination among major energy producers and consumers toward our collective interest in the stability of global energy supplies, saying they're closely monitoring the global oil and gas market conditions in the context of Russia's further military aggression. It's a much longer statement, but that's generally what it says with regard to the financial markets and the impact on consumers there. There's also a meeting of the European Council, the Nato summit, so several different multilateral engagements to make sure that all of these Western allies are on the same page as they are set to unveil a broad variety of sanctions across the board to try to exact more financial pain on President Putin. As far as what those sanctions could be, well, we've learned both from public commentary from the White House and from conversations with people who are briefed on the matter that this next wave of sanctions is expected to include targets on Russia's biggest financial institutions, prohibiting transactions with and through those institutions, possible export controls on high-tech products and software that would allow Russia to modernize its economy. The West wants to cut Russia off from acquiring some of that technology, and also targeting more individuals with ties close to the Kremlin and to President Putin. So certainly we could see a wider net cast this time around when the U.S. and the West announce their sanctions. For his part, President Putin is trying to blunt the impact of sanctions and trying to show some force with his relationships with Russian businesses. Apparently, according to Russian media reports, he has convened or has invited Russia's IT sector for meetings at the Kremlin. And here you're looking at a video of him holding a meeting with the head of the president of the Russian Union of Industrialists and Entrepreneurs, who suggested that Russia needs to remain engaged in global commerce despite looming sanctions. So clearly there are some fears within Russia and within the Russian economy of what sanctions and counter-sanctions could do to Russia's standing in the world. Certainly it is the White House's intent to exact a lot of financial pain. We'll see exactly what the president has in mind, Kelly, in just a few minutes.
And maybe the two most severe steps they could take, Kayla, sounds like still are off the table as it regards access to SWIFT, and also hitting them on the energy front, where it's hard to damage their exports without damaging our imports, our economy as well.
That's right, Kelly. So there are a few different issues with regard to SWIFT and with energy. Of course, energy is a huge issue with inflation around the world and a really tough position for consumers. The hope is, according to my sources, they say that by targeting Russian banks, that there's a hope that you could sweep up indirectly a lot of those energy transactions without having to target the energy exports themselves and face the political blowback and the supply blowback of doing that. On SWIFT, I'm told that Europe has never been on board with this. Even as recently as this morning, a European official told me that despite pressure from Capitol Hill to put SWIFT in this package, that Europe is simply not on board. And so how effective would it be for the U.S. to say that it was not going to be doing SWIFT transactions with Russia while Europe was still doing them? So certainly you would need some sort of agreement among those countries to actually have the sanctions be effective. And I'm told that at least as of this morning, that agreement wasn't there.
And it is significant, Kayla, because in the one that could be most punitive, which is to cut off access to that system, it does suggest there's still a difference of opinion between the U.S. and Europe as to how severe the reaction to Russia's invasion should be. I mean, it really comes down to that core issue where we seem more willing to cut them off. The Europeans still seem more reluctant.
Well, certainly the European economies are more inexorably intertwined with Russia's. Their companies acquire and procure way more goods from Russia using the SWIFT system, just to use one example, than, say, American companies and consumers do. So certainly there's a much closer tie between the economies of Europe and Russian goods and services than there is here in the U.S. But certainly they are in the process of reaching an agreement on a package that they say will exact more pain at this moment, while leaving some of those other items, Kelly, still on the table.
True. Absolutely. Kayla, thanks so much. We'll see you again soon. Kayla Tausche. The cybersecurity stocks today are a key reason for the Nasdaq's outperformance. Look at the green on the screen behind me. Palo Alto up 9%, CrowdStrike up 8%, CyberArk, Tenable, Fortinet. Analysts are expecting their business to get an uptick as concern mounts about Russian cyber attacks that could be on the way. A couple of technicals are also catching traders' attention today. The Nasdaq sell-off hit the 20% mark earlier, going back to when it began in November. That may have brought in some buying. The Nasdaq 100 relative strength also falling below 34. That's been a level some traders have traditionally liked to buy. Bob Bassani is down at the NYSE with more on these markets. Bob?
And very choppy, still indeterminate trading. 3-1 declining to advancing stocks. True, Nasdaq's been in and out of positive territory, partly on those cybersecurity stocks, but really on big cap tech. Take a look at these mega cap tech names, which have generally been flat to slightly positive on the day. There's the S&P 500, by the way. We opened down 100 points, and we've cut those losses in half right now. But this is what I'm talking about, big cap tech. What's going on? Well, traders are trying to convince themselves that this macro situation is now going to make the Fed a little less likely to be more aggressive in hiking interest rates. Well, maybe, but at this point, there's a very interesting trend going on. Buy some of these big cap tech stocks on weakness and sell big names that have done well, like consumer staple names. These stocks have been outperformers recently, so they're using them as a source of funds today, the consumer staples, to buy tech stocks. We'll see if that lasts. One big problem, and the reason the Dow is underperforming the S&P, is the financial sector. So JP Morgan, Goldman Sachs, American Express, Visa are really weighing on the Dow, heavily represented in the Dow. Interest rates have actually stopped going up. They're going down at this point. That's weighing on a lot of the banks, including some of the big regional banks like Zions. The market's got three big problems that I've been emphasizing. Number one, we have higher inflation. Remember, stocks can do well in modest inflation, but in very, very severe inflation, 7% is a lot. They have trouble raising prices, corporations, over long periods of time. We have slower growth. We're not in any recession, of course, but higher commodity prices are going to slow growth. And the Fed tightening, this is a big problem. Historically, you put these three things together, they are historical problems for the market. We are looking for signs of a bottom. We just don't have it. There are technical factors that you can look at. Is there a drop in selling pressure? No. Do we get multiple 90% downside days followed by multiple 90% upside days where people switch their opinions? No. Is there a divergence in new lows? No, we're still hitting a lot of new lows at this point. So, Kelly, there's no resolution to this and no immediate sign of any technical bottom. All right,
Back
Bob, to you.
Thank you very much. Our Bob Bassani down at the New York Stock Exchange. Well, the sell-off in stocks has been deepening all week. The S&P breaching those late January intraday lows over the past 16 hours. There it is now at 4180. Remember, the old low was 4222. While some expect that to unleash more selling pressure, others are taking it as an entry point. Michael Darda of MKM Partners today writing, time to buy the sell-off, recommending cyclicals, value stocks, and reopening plays. Eric Johnston at Cantor Fitzgerald liking the tech stocks for at least a short-term technical trading rally. Joining me now is Dan Genter. He's CEO and Chief Investment Officer of RNC Genter Capital Management. Dan, it's good to see you. And do you just stay on the sidelines here?
No, Kelly, I think you have a real opportunity here actually to do some rotation, actually get out of some of the stronger names that have held up very, very well. And then there's some very distinct weakness. This is just based on the uncertainty that's here. So I think that you can, there's some real buys right now in healthcare, which is a sector that we think has been dramatically really undervalued and clearly is not going to get hurt in this, even if the conflict escalates. I think also on the financial side, some of the, again, Bob just mentioned that some of the money centers and some of the regionals are getting hit today. And that's because they feel that now the Fed may go on hold. And if interest rates don't go up, they don't have an increase in their net interest margins. And so therefore they're getting beat up. We don't think that necessarily is going to happen. So I think there's some good buys there. I think in healthcare, financials, you've got some significantly high dividend stocks. There's probably some you do want to stay away from. The travel industry is, especially those that have European exposure, is getting hit pretty hard. There might be some domestics, frankly, that are hit a little too hard. It's not going to stop domestic travel, and that might be a buy entry. So I think that, now is the time that, I don't think you want to buy the market weakness in general necessarily, because, we just have too much uncertainty. And the market will take good news or bad news. It just won't take no news. And that's where we are right now. But I think there's some individual rotation that investors can take advantage of.
But you are expecting we're going to trade a little heavy still for the next kind of weeks or however long here, maybe 5% more downside for the market as a whole. What does it say to you when the S&P sets an intraday low, a couple months later breaches that, when the NASDAQ has a 20% correction, which we often only see when there are recessions? Some other times we can kind of shake it off. But those two sort of significant milestones, what do they mean for you?
Well, what they mean is market sentiment certainly near term has changed. I mean, we were dealing with a situation where it was a FOMO, fear of missing out. And now we're definitely going to a full buy, if you will, which is fear of being in. So everyone's concerned, as I mentioned a few moments ago, the market will digest good news. It'll digest bad news. It just doesn't like no news. And that's where we are. No one really knows where this is going to go. They don't know what the outcome is going to be. I think that what we can look at is, again, looking at the fundamentals in the U.S., which clearly have not changed, looking at companies that might have some near-term detriment, and then looking at those that are going to benefit. Look, this is going to be a clear long-term benefit for energy, for example, just because it's going to be a refocus on being energy efficient, being energy independent. Frankly, we're going to add about 1 million barrels a day in the next year, and we're going to be, the major exporter probably in the world. So there's companies that are going to benefit, and I think you just can't get caught up in the very short term, even though the market's going to have pressure. And frankly, one of your guests, Art Cashin, who's one of my favorites, I think mentioned it very good this morning. He said he had advice 60 years ago that someone told him, "Hey kid, don't bet on the end of the world. It only happens once, and the odds are way against you." And I think that's what people have to look at right now, is just keep a cool head and look for opportunity.
Fair enough, although I also like the way you put it, that you say wars always destroy value, often in unpredictable ways. And maybe that reference to European travel stocks is a reminder, people are right to be a little concerned heading into an environment like this, especially, I don't know what analogies we're supposed to draw on. So, there is, I think, some comfort in knowing, there's going to be fallout here. It's not to say that everything's going to be, hunky-dory, just fine, own stocks and don't worry about it.
Well, that's absolutely right. I think people need to be cautious, and which is why I mentioned earlier, I think you just don't, jump into the water head first, but I think you can stick some toes in. And when you start to really look at things of where we're likely to be 3 years from now, there are some attractive entry points, knowing that there's just no way in the world we're going to predict the next 3 weeks, even next 3 months. We're certainly not going to predict the next 3 minutes. So people have to be cautious. And I think if you have extended your risk trade, you need to take some of that off the table and go to some things that are going to carry you through this, maybe higher dividends, stronger earnings, ones that are clearly not going to be affected long term.
All right. Dan, thanks very much. It's good to have you today. We appreciate it.
My pleasure.
Dan Genter with RNC Genter Capital Management. Yields are recovering somewhat after dropping sharply last night as global investors piled into the safety of U.S. Treasury bonds. Just under 192 is where we are in the 10-year at the moment. Let's get out to Rick Santelli with more for us. Rick?
Yes, and before we get to the charts, anybody notice the rally in Treasury yields in the last few minutes? 7-year auction. Yes, we had 50 billion 7 years today, completing 155 billion in supply. And boy, it was an A-plus auction. But who would expect anything less? When there's a flight to safety and you have an auction, it seems like a twofer, doesn't it? I will go through the highlights. 1.905 was the yield. Where was the yield trading in the when issued market? 1.915. A whole 1 basis point turn to the screws, which means higher yield, lower price. In this case, lower yield, higher price. That's a good thing. A-plus auction. The best indirect bidding, which of course is foreign entities since Jan 21, direct bidders like pension funds, the biggest bid percentage since June of 2019. But by far and away the winner, the dealers who collect the leftovers had a very small amount, only 12.3%, the smallest amount since January of 2018. Stellar auction. Let's get to the charts. A 2-day of 2-year, and you can see that it has pushed its yield down in the last few minutes. It's now down 10.5 basis points. Its low yield overnight was 1.45. It's now down, as I said, a little over 10. If you go to the 10-year, we're down about 7 basis points. So you see that the curve is steepened about 3 basis points. And you could also see we're down as low as 184. Finally, Boone's overseas, no different. Today they closed at 17 basis points, or 0.17%. That's the lowest yield close in 3 weeks. They had a low today of 12 basis points. And finally, 10s minus 2s. I've talked about that. The yield curve flattened initially. Now it's steepening, which means maybe some of the biggest trading is over. It hit a 22-month flat and then did a reverse from 36 up to 42. And finally, the dollar index. Should it close here? Well, it'd be up about 1%. It'd be the best close going back to, June of 2020. And guess what? That means the euro is now having its worst close since June of 2020. Kelly, back
and
to
that
you.
dollar strength you can read as another market headwind. Rick, thank you very much. We appreciate it, Rick Santelli. The events of the past 16 hours are definitely having an impact on the market's expectations for the central bank's hiking plans. Steve Leisman is here with more. And Steve, Goldman was pushing back against this, I think, last night, saying inflation makes it different this time. But what are you hearing?
All right, let me tell you, we had a bunch of Fed officials, Kelly, who have spoken. And so far, those who have spoken say they're monitoring the situation in Ukraine carefully for potential economic and financial impact is what you'd expect them to do. But they're sticking so far to their position that rates do need to rise. The market itself, meanwhile, is pricing out more extreme rate moves by the Fed. Loretta Mester, the Cleveland Fed president, speaking at noon, saying the implications of the unfolding situation in Ukraine for the medium-run economic outlook in the U.S., that's important. She's talking about that. Will also be a consideration in determining the appropriate pace at which to remove accommodation, not necessarily saying they shouldn't remove it. Richmond Fed President Tom Barkin saying as a result of the Russian invasion, quote, I don't think you're going to see much change in the underlying logic, that is, that rates need to normalize. Market reaction has been to dial out the chance of a 50 basis point rate hike in March. It was 66% a couple of weeks ago. I just checked after Rick reported the auction. It's now down to just 6%. So really becoming a very minority point of view in the market. But predictions for future rate hikes remain pretty well intact for this year. Among the Russian-U.S. financial connections, they're pretty small. Russia holds a small amount of U.S. treasuries. U.S. banks have limited exposure likely to Russia, more, of course, on the European side. And Russia's a major oil supplier, of course, and other commodities as well. So taking Russian commodities off of world markets, if it happens through sanctions, could boost inflation and complicate the Fed's job on the upside, though. U.S. growth is recovering smartly from this Omicron wave, so it'll be in a better position to weather it. A separate downside risk, of course, comes from European economic and financial exposure to Russia. That is greater. We've got to watch, Kelly, for that rebound here on U.S. shores.
Steve, but what do you make of this idea, which I do think is different now from the last cycle we lived through? 2010 to 2019, any event like this, absolutely the Fed would have moved to the sidelines. Can they afford to do that right now? I mean, that's basically what Goldman was saying. They don't really think this changes their calculus that much.
No, and that's what Fed officials are saying. That's what I'm saying. I don't see them moving to the sidelines. I do see them continuing with rate hikes. Maybe it takes the 50 off the table. Maybe they turn around if there's a big dramatic effect, Kelly, on, say, for example, consumer sentiment, which has a follow-on in consumer spending. and that ends up reducing inflation more quickly. It could mean fewer rate hikes, but it's really important. Loretta Mester picks her words extremely carefully. And she says the impact on the medium term, it could affect the pace. Medium term, probably 6 months, a year out. Pace meaning how quickly they do it, not whether they do it at all. I think that's probably as close to the center of the committee's view. On day one, mind you, we're going to have to watch this over days to see what the sanctions do and the overall economic impact.
No, but I like that nuance. We know with the Fed, every turn of phrase matters very much.
Exactly.
Steve, we really appreciate it. Our Steve Leisman. Let's bring in Anita Markowska. Now she's the chief financial economist with Jefferies. Anita, welcome. And you have been out there for some time. On the more hawkish end of things, I would say just saying this inflation problem is real. The Fed needs to react to it. So what do you think happens now? I mean, are you at 25, a hike, a meeting still for the rest of the year?
I am, and that's been the message from Fed officials so far. You know, stay the course, hike as planned, and then continue to reassess. We know what the first order effects of this are, and that's that, you know, prices at the pump are going to go up and consumers are going to have to pay more. As of right now, when we run, you know, what energy prices have done through our inflation models, energy is on track to add about 0.3 to the CPI in February and 0.1 in March, and then actually turn around. But in the near term, I mean, this is clearly an inflationary, you know, shock. Medium term, it's less clear, right? Yeah. Because we just don't know how consumers are going to respond, right? Are they going to stop spending on other things and sort of turn this into a disinflationary shock, which is, by the way, what they would have done over the past 20 years? Or are things different now? Are they going to dip into savings, or are they going to just demand higher wages, turning this into more of an inflation wage spiral? We just don't know that. I'm sort of leaning toward the latter, but if I was a Fed official right now, I certainly wouldn't want to prejudge or act on a hunch. So I think it makes sense to move gradually, predictably, and just continue to reassess.
Let me ask you about a couple of the dovish arguments making the rounds. I'd be curious for your take. We talked to Tom Porcelli yesterday of RBC, and he said that the shift from goods back to services spending is going to be disinflationary this year. Would you agree with that? And if so, how disinflationary?
I actually don't expect, well, I do expect the gap between goods and service spending to narrow, but I don't expect it to close entirely. I think that households are generating enough income from wages, from employment, and frankly, they have a lot of savings that they could dip into, that I think there's enough income growth to allow service spending to continue to normalize without pulling down on goods spending. So my base case is that goods spending just essentially flatlines here, but does not pull back. And so that means that, you know, if we're going to relieve some of these pressures in the supply chain, they're going to have to come through just increased imports, increased production. The good news is that we've seen some improvements. Imports absolutely surged in the fourth quarter. We've seen some buildup in retail inventory. So supply is catching up to demand. But I think that's sort of where kind of most of the work is going to have to be done. It's not, I don't think we're going to get much relief from weaker consumer demand.
I've seen people in the past just 24 hours or so pointing to those retail inventories building and saying, see, look, this is a sign there's too much stuff. There's not enough buyers. That's why Home Depot's down. That's why, you know, have we reached that phase yet or not?
I think we've reached an inflection point. I think that supply imbalances probably peaked around October and they've started to narrow, but we still have a long way to go. Even if you look at retail inventory levels, they're still below pre-pandemic levels. When you look at IS ratios, they're still a long, long way to go. When you look at survey measures of where inventories are relative to where businesses want them to be, they're still very low. So yes, we've made some progress on inventories, and that should start to take some edge off inflation in the next few months. But we've got a long way to go to you know, before we get to a normalized situation.
IS ratios or inventory to sales ratios. I got a couple more to throw at you here. So what about the argument that consumers, especially lower-end consumers, have now tapped out their savings? How much firepower is there left to sustain spending?
So when we look at cash holdings across the income distribution, for 80% of the population, the top 80% of the income distribution, cash levels are still very elevated. They're at levels relative to income that we haven't seen since the 90s. So yes, there are pockets of potential stress and weakness. I'm talking about the bottom 20% of the U.S. population. where there really is no buffer, right? And those are the households that are going to be exposed disproportionately to rising energy prices as well. But again, 80% of the population is still sitting on very significant cash buffers. I would also add that for those lowest income households, they're actually enjoying the fastest wage growth in decades, right? They are leading the charge in terms of wage inflation, which is something we haven't seen in over 30 years. So yes, they're tapped out in terms of their savings, but they're still enjoying pretty robust wage growth. And so that is a little bit of a buffer for them.
And my final one was going to be consumer sentiment, which, curious if you just fall in the camp that sentiment is weak for other reasons. It's not as much of a leading indicator. And maybe in answering that, then you can also tell us, so you don't think inflation is really coming down in the near term, which would kind of tie the Fed's hands here.
So I think the sentiment has completely decoupled from spending, and I think it's almost more of a reflection of maybe the political environment more than the economic backdrop. And so it's clearly driven by how people respond to inflation, but I think a lot of those answers are maybe politically motivated. I do expect to the latter part of your question. I do expect inflation to slow, right? As I said, those supply-demand imbalances have peaked. They're improving. Even in housing, rent inflation actually inflected around September. It has started to slow. The CPI typically lags that by about 6 months. So, look, I think going from 7+% inflation to 3 is going to be, relatively easy. What's going to be hard is squeezing that last percentage point, getting from 3 to 2% inflation, which I think is embedded in the labor market. That, I think, last piece will ultimately have to be squeezed out by the Fed, and a 2% funds rate is not going to do it. So I think at some point, we're going to have to price in more hikes for next year, but that's probably a debate that the market's not ready to have until well into the second half of the year.
Fascinating. Anita, always have all this data at your fingertips. Really appreciate you being on. Thanks for joining me today.
Thanks, Kelly.
Arnita Markowska joining me from Jefferies. All right, we've got some breaking news out of Washington. Reports out now that President Biden has been informed that cyber attacks against Russia are an option. Let's get to Eamon Javers for those details. Eamon?
Kelly, this is reporting from NBC News now, suggesting that President Biden has now been presented with the options for U.S. cyber strikes that could take place inside Russia that would have a goal of slowing or halting the Russian advance into Ukraine. Now, this is not to say that these options have been taken or that President Biden would take any of these options, but NBC News is citing 4 sources familiar who say that among those options are disrupting internet connectivity across Russia, shutting off electric power, and tampering with railroad switches in order to hamper Russia's ability to resupply its forces in Ukraine. So offensive cyber strike capability inside Russia designed to slow down this advance. That is not something the United States has ever done before. This would be an entirely new form of warfare for the United States. And of course, there is no guarantee that President Biden will choose to enact any of those options. But as you can imagine, a whole range of options now being considered inside the White House as they look for ways to respond to this Russian aggression. And we will hear from the president shortly this afternoon. We may get some indication of the direction he intends to go. Of course, the concern on the part of all observers here is that threat of escalation. If the United States takes action, what does Russia do in response? What does the United States feel it has to do in response to that? And on and on and on, up the escalation ladder that we used to worry so much about during the Cold War, Kelly. That kind of worry is back on the table now.
Well, that's exactly what I was going to ask you, Eamon. And the performance of the cyber stocks already today suggests they're sniffing this possibility out. Do we really want to go down the road of inviting a response when already we've been the victims of some cyber attacks by Russia that have been pretty severe? If we're going to open that can of worms, how are we going to make sure corporate America, our energy infrastructure, the power grid, all of these different local government schools, that they're all ready, that they're all protected?
Well, look, I mean, there's one school of thought that says that we're already opening that can of worms, even if we don't go forward with offensive cyber strikes in Russia, and there's no indication that the president is planning to do that. But the president is reportedly planning on a range of tougher sanctions against the Russians. And there are some theorists who believe that the Russians could respond to that with cyber attacks against the United States. I talked to Dmitry Alperovich this morning. He's a cybersecurity expert who's been looking closely at this. And he says that, the Colonial Pipeline attack that we saw over the summer that caused gas lines up and down the East Coast, that was just a ransomware gang. He says Russian intelligence has capabilities inside the United States to do damage that are much, much greater than that. And that we could see, Colonial Pipeline times 100 just in response to U.S. sanctions here. So if the U.S. moves forward with sanctions this afternoon, then what's the Russian response to that? And are we already on an escalation ladder? And then the question becomes, what's the political pressure on leaders in the West and in Russia to either escalate or to de-escalate if the pain gets too intense?
Right. Great points, Eamon. It's a tricky one. We really appreciate your reporting. Thank you so much. Our Eamon Jabbers in Washington. The president is set to address the invasion of Ukraine. He's expected to announce more sanctions. He's already tweeted that this was done in coordination with G7 partners on their call this morning. We're still awaiting his appearance and those details. How far-reaching and punitive could the sanctions be? What would they mean for policy here and in Europe? Joining me now, Charles Kupchan is a senior fellow at the Council of Foreign Relations and a professor of international relations at Georgetown University. And Dan Clifton is head of policy research at Strategas Securities. Welcome to both of you. Charles, I'll begin with you. And you just heard what Eamon said about cyber attacks. What should we all be expecting at this point?
Well, I think we can conclude that we're not going to be able to block or seriously blunt the Russian invasion. They've already begun to suppress Ukrainian defenses. I'm guessing we will see forces in and around Kiev pretty soon. So, yes, we have the option of cyber offense against Russia, but to some extent that does widen the front and it engages the United States more directly in the conflict. I'm guessing that we're not going to see that option, at least at this point. What we're looking at is, number one, very significant severe economic sanctions. Number two, reinforcement of NATO's eastern flank, because if Putin is willing to invade Ukraine, might he test NATO? And three, I'm guessing we will see an effort to begin to get arms and other kinds of support to the Ukrainians to resist Russia's occupation. In many respects, that's the best way to defeat Putin. We can't stop his military, but we can foil his occupation.
Well, let me just follow up on that point for a moment. So if cyber attacks, if they're ruled out because they would invite too dramatic of an American response, if, shutting them off from SWIFT is ruled out because it would have too bad economic repercussions on Europe, then what are the additional deterrent measures that still exist? Or does this, I think Ambassador McFaul kind of hinted at this last night as well, are we all just hoping that the Ukrainians are able to somehow hold the Russians off or, continue down this path for as many years as it takes to go the Afghanistan route and hope that at some point they simply outlast this effort?
I wouldn't presume that cyber and SWIFT are off the table. We're still in the early stages. We could see things escalate over time. But you are talking about very significant, far-reaching commercial sanctions against Russia. But in my mind, Putin knew this was coming. He made a decision to go forward, even though he knew what kinds of consequences it would bear. Where I think he's taking a leap into the dark is what comes after a successful invasion. Does he really think that he can install a puppet regime that will enjoy the support of the Ukrainian people? Does he really think he can hold down 44 million Ukrainians who no longer want anything to do with Russia? That's where I think we will see Putin's Achilles heel.
All right, and Dan, what would you add to this, and where would you focus investors' attention?
Yeah, I would start off by saying the economic sanctions are going to be pretty tough. It won't stop Putin, but this first, what I would call the first real round of economic sanctions, which are coming today, will be pretty biting on the Russian economy. I just don't think Putin really cares about that economic damage. Where you could start to see is in a further round, particularly the prevention of dollar clearing on certain industries. The U.S. very reluctant to use that and very different than SWIFT, but one that is going to be on the table if this continues to escalate. So I tend to believe that we're in a period of heightened volatility here. This will be determined by how long this effort goes on. If Russia can clear out the Ukraine government in 2 or 3 days, then it will become a much more silent behind the scenes fight. Cyber starts to become a bigger issue. And so we just got to adjust to it, because our ultimate thesis is that post-Cold War era is coming to an end. Borders are changing, and investors are going to need to adapt to it. But I would argue here, Kelly, more defense spending, more cyber spending, and most importantly, a renewed focus on fossil fuels in both the United States and Europe, which is very different than the trend that we've been on over the last few years, given the ESG moment. But the world is about to disassociate itself with Putin, and they're going to need the energy security to be able to provide for that.
Absolutely. The U.S. already on pace to be the #1 oil and LNG exporter. Charles, let me turn to you as we're about to hear from the president about these sanctions, which, to Dan's point, are very severe, reportedly. The Russians have the highest amount of international reserves, apparently, that they've ever had, according to RBC, $630 billion. So it seems as though they've been somewhat preparing for this moment. How might that financial cushion change the response here?
There's no question that they've been preparing. And it's not just the big reserves that you mentioned, Kelly. It's also the repatriation of supply chains. It's deepening commercial linkages to China, which happened after 2014 when we first hit them with sanctions. But I do think that what Putin is doing here is miscalculating about the strength of the West. He looked at political polarization in the U.S. Britain has left the European Union. Chancellor Scholz is new. He's untested in Germany. I think he thought he could crack the West, divide U.S. and Europe, divide countries within the European Union. So far, he's wrong. We've seen incredible solidarity. Sanctions are being applied in unison, shoulder to shoulder with European allies. And so I think that Putin really has overreached here. He's taken a big bite rather than a small bite. Over the long run, I think it's going to come back to haunt him. But as Dan was saying, we all better fasten our seatbelts. There will be big impacts on defense spending, big impacts on energy prices. We need to prepare for something that it's going to look like Cold War 2.0.
Dan, is there something that Putin can be offered still at this point as part of a negotiation, a way to save face, some kind of de-escalation or step down?
You know, I think that there was a hope that he could do that. But when you see an Operation Desert Shield-like formation along the border, he had made this decision a long time ago. As far back as 2014, we could find him making statements that Ukraine should no longer exist. And I believe that this is an ideological crusade to try and rebuild the Soviet empire. And so the only thing that's going to stop him is not a negotiation, but the fact that he has to realize that he overreached based on what we're seeing in terms of the unity of the West. And if that unity holds, it will be harder for him to actually continue to press forward, particularly if the U.S. is reinforcing along those borders of Ukraine, which I believe that we will start to see NATO starting to reinforce those positions. Putin is very flexible, but he is on a clear ideological mission to rebuild the Soviet empire or the Russian empire. And I think that we're just going to have to wait this out and hold our ground.
Yeah, and if that unity holds, feels like the key thing here for all of us. Dan and Charles, thank you both. Really appreciate it. Dan Clifton, Charles Kupchan, speaking about these matters as we wait to hear from the president. Energy is going to be a big part of this story, and we've already seen some big moves higher after Russia's invasion of Ukraine. We've seen Brent topping $100 a barrel, WTI crossing that mark for the first time since 2014 before paring back its gains. Similar story in natural gas, where prices got close to $5 per million BTUs before retreating. Russia is the world's second largest producer of nat gas, one of its biggest oil-producing nations. The largest impact will be felt in Europe, where Russia supplies 27% of oil imports. Just 3% of our imports come from Russia. So for more on the impact of all of this, let's bring in Andy Lippow. He is the president of Lippow Oil Associates. Andy, it's great to see you. What options does the White House have to ease the pain on consumers here?
Well, their options are quite limited. Probably the biggest option they could do is suspend the federal excise tax on gasoline, which is 18 cents a gallon, and also suspend the federal excise tax on diesel fuel, which is 24 cents a gallon. That would have an immediate impact at the pump. Beyond that, their options are few. We could do a coordinated release of the strategic petroleum reserves, which would add more temporary supply, but it doesn't solve the problem of just getting more oil out of the ground. And we've already seen since July of 2020 a draw out of the SPR of about 74 million barrels.
Right. So we've seen a draw already. We've seen levels at, somewhat of a lower ebb than normal, and this would add to that. The other options we've seen politically floated, at least, would be maybe some kind of gas tax holiday, but that would actually encourage potentially more consumption, or at least not as big a demand response, meaning our demand for crude stays the same or goes higher. What impact would that have?
Well, that would continue to give upward pressure on oil prices. The other thing that the government could do is they could pressure Saudi Arabia, the United Arab Emirates, and Kuwait to utilize some of their spare capacity, which is estimated in aggregate to be about 4 million barrels a day, just to simply add more supply to the world oil market. That would have a negative effect on oil prices. And if we should come to an agreement with Iran, that could let loose of over 100 million barrels of crude oil that's in floating storage, and we would ultimately see Iran increase their production by about 1.3 million barrels a day.
Right. It's ironic that in some ways having to warm relations with Iran to get their barrels is one way of offsetting the loss here from the escalation in Russia. What about the options for U.S. drilling, Andy, for the pipeline infrastructure and the rest of it? How quickly, even if there was some imaginary executive order to get things going, how quickly could we see a supply response here?
Well, the pipeline infrastructure is in place. We have more than enough infrastructure to export additional barrels of crude oil. It's just going to take some time to get more oil out of the ground. We've already seen Exxon and Chevron announce they're going to increase their Permian Basin production by 25% and 10% respectively. But these increases are going to occur over the next couple of months. Altogether, we expect that U.S. production is going to increase by 600,000 barrels a day year on year. But once again, it's not a today thing. It's what happens eventually.
And so finally, give us a sense of where prices at the pump are today and where are they headed based on the current trajectory?
Well, today gasoline is about $3.54 and diesel on a national average is $3.96. I expect they're going to rise about 20 to 30 cents a gallon over the next several weeks, especially under today's situation. But one thing that I should point out is we haven't seen a supply disruption as yet. Prices have risen in anticipation of a disruption. And if that is off the table, we can see oil prices fall back.
Yeah, wouldn't that be nice? For now, we're faced with high prices and a lot of concerning talk. Andy, thanks for joining me today. Appreciate it. Andy Lipow with Lipow Oil Associates. Let's turn to Shepard Smith, who is standing by as we await President Biden. And Shep, it's just been a long wait for further details on these sanctions.
Yeah, I know they have a lot to go through because of Eamon's reporting earlier is notable that they have a whole range of possible sanctions, and some are about what's happened already. Some are about kinetic activity on the ground now. For instance, would the United States authorize the shutdown on a temporary basis of the subway system in and around Moscow in an effort to grind things to a halt? And part of the consideration would be, what would Russia do in response to the United States? We all remember the oil pipeline and all of the trouble that was caused there in the United States. So you don't want to get into a tit-for-tat situation. So what happens now is not only extremely important, but outrageously complicated. One thing leads to another. Our history books will tell us what can happen as things escalate, and it can happen quickly. In fact, Kelly, one thing we've just gotten into the newsroom in the last few minutes from Reuters News Service, and we'll talk about that. It's bombing in the south, but the president's here.
Shep, thanks, President.
The Russian military has begun a brutal assault on the people of Ukraine. Without provocation, without justification, without necessity, this is a premeditated attack. Vladimir Putin has been planning this for months, as we've been saying all along. He moved more than 175,000 troops, military equipment, and positions along the Ukrainian border. He moved blood supplies into position and built a field hospital, which tells you all you need to know about his intentions all along. He rejected every good faith effort the United States and our allies and partners made to address our mutual security concerns through dialogue to avoid needless conflict and avert human suffering. For weeks, we have been warning that this would happen. And now it's unfolding largely as we predicted. In the past week, we've seen shelling increase in the Donbass, a region in eastern Ukraine controlled by Russian-backed separatists. The Russian government has perpetrated cyber attacks against Ukraine. We saw a staged political theater in Moscow, outlandish and baseless claims that Ukraine was about to invade and launch a war against Russia, that Ukraine was prepared to use chemical weapons, that Ukraine committed a genocide. Without any evidence, we saw a flagrant violation of international law in attempting to unilaterally create two new so-called republics on sovereign Ukrainian territory. And at the very moment that the United Nations Security Council was meeting to stand up for Ukraine's sovereignty, to stave off invasion, Putin declared his war. Within moments, missile strikes began to fall on historic cities across Ukraine. Then came the air raids, followed by tanks and troops rolling in. We've been transparent with the world. We've shared declassified evidence about Russia's plans and cyber attacks and false pretexts so that there could be no confusion or cover-up about what Putin was doing. Putin is the aggressor. Putin chose this war, and now he and his country will bear the consequences. Today, I'm authorizing additional strong sanctions and new limitations on what can be exported to Russia. This is going to impose severe cost on the Russian economy, both immediately and over time. We have purposely designed these sanctions to maximize the long-term impact on Russia and to minimize the impact on the United States and our allies. I want to be clear, the United States is not doing this alone. For months, we've been building a coalition of partners representing well more than half the global economy. 27 members of the European Union, including France, Germany, Italy, as well as the United Kingdom, Canada, Japan, Australia, New Zealand, and many others, to amplify the joint impact of our response. I just spoke with the G7 leaders this morning, and we're in full and total agreement. We will limit Russia's ability to do business in dollars, euros, pounds, and yen to be part of the global economy. We'll limit their ability to do that. We're going to stunt the ability to finance and grow the Russian military. We're going to impose and we're going to impair their ability to compete in high-tech 21st century economy. We've already seen the impact of our actions on Russia's currency and the ruble, which early today hit its weakest level ever in history. The Russia stock market plunged today. The Russian government borrowing rate spiked by over 15%. In today's actions, we've now sanctioned Russian banks that together hold around $1 trillion in assets. We've cut off Russia's largest bank, a bank that holds more than 1/3 of Russia's banking assets by itself, cut it off from the U.S. financial system. And today, we're also blocking 4 more major banks. That means every asset they have in America will be frozen. This includes VTB, the second largest bank in Russia, which has $250 billion in assets. As promised, we're also adding the names to the list of Russian elites and their family members that we're sanctioning as well. As I said on Tuesday, these are people who personally gain from the Kremlin's policies, and they should share in the pain. We will keep up this drumbeat of those designations against corrupt billionaires in the days ahead. On Tuesday, we stopped the Russian government from raising money from U.S. or European investors. Now we're going to apply the same restrictions to Russia's largest state-owned enterprises, companies with assets that exceed $1.4 trillion. Some of the most powerful impacts of our actions will come over time as we squeeze Russia's access to finances and technology for strategic sectors of its economy and degrade its industrial capacity for years to come. Between our actions and those of our allies and partners, We estimate that we'll cut off more than half of Russia's high-tech imports. It'll strike a blow to their ability to continue to modernize their military. It'll degrade their aerospace industry, including their space program. It'll hurt their ability to build ships, reducing their ability to compete economically. And it will be a major hit to Putin's long-term strategic ambitions. And we're preparing to do more. In addition to the economic penalties we're imposing, we're also taking steps to defend our NATO allies, particularly in the East. Tomorrow, NATO will convene a summit. We'll be there to bring together the leaders of 30 allied nations and close partners to affirm our solidarity and to map out the next steps we will take to further strengthen all aspects of our NATO alliance. Although we provided over $650 million in defensive assistance to Ukraine just this last year, let me say it again. Our forces are not and will not be engaged in the conflict with Russia in Ukraine. Our forces are not going to Europe to fight in Ukraine, but to defend our NATO allies and reassure those allies in the East. As I made crystal clear, the United States will defend every inch of NATO territory with the full force of American power. And the good news is, NATO is more united and more determined than ever. There is no doubt that the United States and every NATO ally will meet our Article 5 commitments, which says an attack on one is an attack on all. Over the past few weeks, I ordered thousands of additional forces to Germany and Poland as part of our commitment to NATO. On Tuesday, in response to Russia's aggressive action, including its troop presence in Belarus and the Black Sea, I've authorized the deployment of ground and air forces already stationed in Europe to NATO's eastern flank allies, Estonia, Latvia, Lithuania, Poland, and Romania. Our allies have also been stepping up, adding the other allies, the rest of NATO, adding their own forces and capabilities to ensure collective defense. And today, within hours of Russia's unleashing its assault, NATO came together and authorized and activated an activation of response plans. This will enable NATO's high readiness forces to deploy and when and where they are needed to protect our NATO allies on the eastern boundaries of Europe. And now I'm authorizing additional U.S. force capabilities to deploy to Germany as part of NATO's response, including some of the U.S.-based forces that the Department of Defense placed on standby weeks ago. I've also spoken with Defense Secretary Austin and Chairman of the Joint Chiefs, General Milley, about preparations for additional moves should they become necessary to protect our NATO allies and support the greatest military alliance in the history of the world, NATO. As we respond, my administration is using the tools, every tool at its disposal, to protect American families and businesses from rising prices at the gas pump. You know, we're taking active steps to bring down the cost, and American oil and gas companies should not exploit this moment to hike their prices to raise profits. You know, in our sanctions package, we specifically designed to allow energy payments to continue. We are closely monitoring energy supplies for any disruption. We've been coordinating with major oil producing and consuming countries toward our common interest to secure global energy supplies. We are actively working with countries around the world to elevate collective release from the strategic petroleum reserves of major energy consuming countries. And the United States will release additional barrels of oil as conditions warrant. I know this is hard and that Americans are already hurting. I will do everything in my power to limit the pain the American people are feeling at the gas pump. This is critical to me. But this aggression cannot go unanswered. If it did, the consequences for America would be much worse. America stands up to bullies. We stand up for freedom. This is who we are. Let me also repeat the warning I made last week. If Russia pursues cyber attacks against our companies, our critical infrastructure, we are prepared to respond. For months, we've been working closely with the private sector to harden their cyber defenses, sharpen our ability to respond to Russian cyber attacks as well. I spoke last night to President Zelensky of Ukraine, and I assured him that the United States, together with our allies and partners in Europe, will support the Ukrainian people as they defend their country. We'll provide humanitarian relief to ease their suffering. And in the early days of this conflict, Russia propaganda outlets will keep trying to hide the truth and claim success for its military operation against a made-up threat. But history has shown, time and again, how swift gains in territory eventually give way to grinding occupations, acts of mass civil disobedience, and strategic dead ends. The next few weeks and months will be hard on the people of Ukraine. Putin has unleashed a great pain on them, but the Ukrainian people have known 30 years of independence. They have repeatedly shown that they will not tolerate anyone who tries to take their country backwards. This is a dangerous moment for all of Europe, for the freedom around the world. Putin has committed an assault on the very principles that uphold the global peace. But now, the entire world sees clearly what Putin and his Kremlin allies are really all about. This was never about a genuine security concerns on their part. It was always about naked aggression, about Putin's desire for empire by any means necessary, by bullying Russia's neighbors through coercion and corruption, by changing borders by force, and ultimately by choosing a war without a cause. Putin's actions betray his sinister vision for the future of our world, one where nations take what they want by force. But it is a vision that the United States and freedom-loving nations everywhere will oppose with every tool of our considerable power. The United States and our allies and partners will emerge from this stronger, more united, more determined, and more purposeful. And Putin's aggression against Ukraine will end up costing Russia dearly, economically and strategically. We will make sure of that. Putin will be a pariah on the international stage. Any nation that countenances Russia's naked aggression against Ukraine will be stained by association. When the history of this era is written, Putin's choice to make a totally unjustifiable war on Ukraine will have left Russia weaker and the rest of the world stronger. Liberty, democracy, human dignity, these are the forces far more powerful than fear and oppression. They cannot be extinguished by tyrants like Putin and his armies. They cannot be erased by from people's hearts and hopes by any amount of violence and intimidation. They endure. In the contest between democracy and autocracy, between sovereignty and subjugation, make no mistake, freedom will prevail. God bless the people of a free and democratic Ukraine. May God protect our troops.
Mr. President.
Associated Press, Zeke.
So do you have any plans to speak with President Putin at this point? And what interactions have you had with the Russian government?
I heard the first part. Do I have any plans to speak with Putin at this point? And what?
What communications have you had with the Kremlin as far as military operations in Ukraine and making sure this does not spiral into a larger conflict?
Well, it's a large conflict already. The way we're going to ensure it's not going to aspire to a larger conflict is by providing all the forces needed in the Eastern European nations that are members of NATO. NATO is more united than it's ever been, and I have no plans to talk with Putin. Wall Street Journal, Tarina.
Mr. President, you didn't mention SWIFT in your sanctions that you announced. Is there a reason why the U.S. Isn't doing that? Is there a disagreement among allies regarding SWIFT and whether Russia should be allowed to be a part of it?
The sanctions that we've proposed on all their banks have equal consequence, maybe more consequence than SWIFT, number one. Number two, it is always an option, but right now that's not the position that the rest of Europe wishes to take. Cecilia Vega, ABC.
Sir, sanctions clearly have not been enough to deter Vladimir Putin to this point. What is going to stop him? How and when does this end? And do you see him trying to go beyond Ukraine And a second question I'll just give to you now. This statement that he gave last night, the threat that he gave, the West will face consequences greater than any you have faced in history. Is he threatening a nuclear strike?
I have no idea what he's threatening. I know what he has done, number one. And number two, no one expected the sanctions to prevent anything from happening. It has to show, this is going to take time, and we have to show resolve. So he knows what's coming. And so the people of Russia know what he's brought on them. That's what this is all about. This is going to take time. It's not going to occur. He's going to say, oh my God, these sanctions are coming, I'm going to stand down. He's going to test the resolve of the West to see if we stay together, and we will. We will, and it will impose significant costs on him.
Will he go beyond Ukraine, sir? Do you see him going beyond?
Yes.
Two topics, just really quick. First, markets are down and gas prices are up. I know you always stress the difference between Wall Street and Main Street, but everybody seems to be in for some economic pain. How economically painful is it going to get for people in this country? And I do have one more question.
First of all, there's no doubt that when a major nuclear power attacks and invades another country, that the world is going to respond, and markets can respond all over the world. So there's no doubt about that, number one. Number two, the notion that this is going to last for a long time is highly unlikely as long as we continue to stay resolved in imposing the sanctions we're going to impose on Russia, period. What's the next question? I'm sorry.
The next question is, did you underestimate Putin, and would you still describe him the way that you did in the summer as a worthy adversary?
At the time, he was, I made it clear, as an adversary, and I said he was worthy. I didn't underestimate him. And I've read most of everything he's written. Did you read I shouldn't, I'm not a wise guy. You heard the speech he made, almost an hour's worth of speeches, why he was going into Ukraine. He has much larger ambitions in Ukraine. He wants to, in fact, reestablish the former Soviet Union. That's what this is about. And I think that his ambitions are completely contrary to the place where the rest of the world has arrived.
You're confident that these devastating sanctions are going to be as devastating as Russian missiles and bullets and tanks?
Yes, Russian bullets, missiles, and tanks in Ukraine. Yes, I am.
Thank you, President Biden. If sanctions cannot stop President Putin, what penalty can?
I didn't say sanctions couldn't stop him.
You've been talking about the threat of these sanctions for several weeks now.
Yes, but the threat of the sanctions and imposing the sanctions and seeing the effect of the sanctions are two different things. They're two different things. And we're now he's going to begin to see the effect of the sanctions.
And what will that do? How will that change his mindset here, given he's attacking Ukraine?
Because it will so weaken his country that he'll have to make a very, very difficult choice as to whether to continue to move toward being a second-rate power or, in fact, respond.
You said in recent weeks that big nations cannot bluff when it comes to something like this. You recently said that the idea of personally sanctioning President Putin was on the table. Is that a step that you're prepared to take? And if not,
it's not a bluff, it's on the table.
Sanctioning President Putin?
Yes.
Why not sanction him today, sir?
Mr. President?
Why not sanction him today, sir?
Mr. President, if I can, you detailed some severe and swift new sanctions today and said the impact it will have over time. But given the full-scale invasion, given that you're not pursuing disconnecting Russia from what's called SWIFT, the international banking system, or other sanctions at your disposal, respectfully, sir, what more are you waiting for?
Specifically, with the sanctions we've imposed exceed SWIFT. The sanctions we imposed exceed anything that's ever been done. The sanctions we imposed have generated 2/3 of the world joining us. They are profound sanctions. Let's have a conversation in another month or so to see if they're working. Yes.
Can I ask you about Zelensky? Sir, you spoke to Vladimir Zelensky yesterday, sir.
What's the risk that we are watching the beginning of another Cold War, and is there now a complete rupture in U.S. and Russian relations?
There is a complete rupture right now in U.S.-Russian relations if they continue on this path that they're on. And in terms of a Cold War, that depends. You have the vast majority of the rest of the world in total opposition to what he's doing, from Asia to South America to Europe to around the world. And so it's going to be a cold day for Russia. The idea, you don't see a whole lot of people coming to his defense.
And are you, if I could follow up, sir, are you urging China to help isolate Russia? Are you urging China to help isolate Russia?
I'm not prepared to comment on that at the moment. No. Yeah. No. He's had his hand up a long time.
Thank you, Mr. President. How concerned are you that Putin wants to go beyond Ukraine into other countries and the U.S. will have to get involved if he moves into NATO countries?
Well, if he did move into NATO countries, he will be involved. We will be involved. The only thing that I'm convinced of is if we don't stop now, he'll be emboldened. If we don't move against him now with these significant sanctions, he will be emboldened. And look, you know, well, anyway.
And can you talk anything more about your conversation? Mr. President.
Why not sanction Putin directly today?
I'm sorry, I can't hear you.
Sir, India, which is a major defense partner of the United States, is India fully with you on the issue of Ukraine and Russia?
Does the Defense Department of the United States?
So India is one of your major defense partners. Is India fully in sync with the United States on Russia?
We're in consultation with India today. We haven't resolved that completely.
One more question.
Okay, thank you all very much. Thank you.
The president speaking at the White House and taking questions from the White House press corps. The president saying this is a dangerous moment for all of Europe. He says Vladimir Putin wants to reestablish the Soviet Union, and there is a complete rupture of U.S. and Soviet